Candlestick Zen. In trading, you always risk money to make money. The more you're willing to risk, the higher the reward, or the loss. Return of investment per trade is just one piece of the puzzle. Risk to reward ratio is about return of investment per trade. The risk part is your investment. The reward part is the return you expect. Risk to reward ratio is a way to quantify your investment against expected return per trade. It is expressed as a relation of two numbers. For example, 1 to 5 risk to reward ratio. 1 to 5 risk to reward ratio means that for each dollar invested, you expect $5 return. That is when you're right. And when you are wrong, you will lose that $1. Many traders focus just on risk to reward ratio without considering the bigger picture. Without the winning rate of the strategy, risk to reward ratio is useless. It doesn't matter if you make $1,000 per $1 you risk if you're always wrong. If your winning rate is 0%, even if you have 1 to million RR ratio, you will still lose everything. On the other hand, even if you have very low RR ratio, you can still get rich with a good strategy. If your strategy has 90% winning rate, even if you have 1 to 1 RR ratio, you can become a millionaire, because 9 out of 10 times you will make money, and only 1 out of 10 times you are going to lose money. That is why risk to reward ratio on its own doesn't mean a thing. Of course, you want to have your RR as high as possible. But here is the thing. Every time you try to increase your reward against your risk, you will decrease the winning rate. And the other way around. Anytime you decrease your reward, you will increase your winning rate. It is like dog chasing its own tail. This is why you need to test your strategy and RR ratio at the same time. RR ratio is the active component in this relation. It is because your RR ratio will determine the winning rate of your strategy, not the other way around. Risk to reward ratio is determined by 3 things: entry level, stop loss level, and take profit level. To find out more about stop loss, watch one of the previous videos named Turn Loss into Profit. Every trader needs to do this. And to learn more about take profit, watch the video named Do you need to target the optimal moment to take profit? Back to the topic, risk to reward ratio. The first thing that determines RR ratio is your entry level. That will depend on your strategy. Many traders think entry is the most important of the 3, but that is not the case. Yes, the time of entry will influence the profitability of your trade, but the other 2 are even more important, because even if you enter your trade a bit late, for example, you can still have the desired RR ratio. Not always, but most of the times, you will be able to squeeze your stop loss and take profit closer, depending on the strategy, of course. If you cannot squeeze, you can wait for the next entry signal. It is better to pass the opportunity than to break your RR ratio rule. Remember, your winning rate depends on it. Even if you change RR ratio of a single trade, you could change the winning rate of the entire strategy. Never change RR ratio of any trade unless you have tested the winning rate with that alternative RR. You will hear some more experienced traders say, cut your losses and let your winners run. Do not do that unless you have tested RR ratios with those exceptions. You have to know exactly how often you will cut your losses, at what price levels, and which conditions will make you cut your loss before the price hits your stop loss. The same goes for letting your winners run. Never let the price pass your take profit level unless you have tested that scenario and you know the RR ratio and the winning rate for it. Always respect your RR ratio every time you trade. And always test your strategy with the specific risk to reward ratio before setting it as a rule. At the beginning of your trading journey, you will want to keep things as simple as possible. It is easier to test a strict set of rules and have a single RR ratio with nice winning rate for your strategy. After a while, when you become familiar and comfortable with those rules, you can develop more. You can optimize your strategy and add additional rules and have more scenarios. But first, try making your base strategy work. Risk to reward ratio is one of the most important rules that you will have in your strategy. It has a direct influence on your long-term winning rate and profit. Know your risk to reward ratio by heart, and it will guide you to prosperity. Candlestick Zen.